Yesterday saw the meme stock traders have a good session as the most popular meme stocks of the moment, which are Trump's media company and Reddit, made nice swings during the session. Other than that, while major equity indices consolidated near all-time high levels, bonds advanced while cocoa futures hit the $10,000 per metric ton mark. So welcome. This is Swissquote's Daily Market Talk. So yes, yesterday was a slow day in terms of economic data and information flow, and a strong day in terms of meme stock trading and speculation, as Donald Trump's Truth Social flew its own wings yesterday for the very first time following last week's successful merger with the blank check company Dwag. So Trump's media and technology group actually rose up to 60% yesterday under the ticker DJT before settling 16% higher at the end of its first trading session, while giving the day traders a nice and an interesting swing. Reddit, on the other hand, also saw a nice intraday volatility. The mother of meme stocks, GME, on the other hand, is also showing signs of life since the beginning of this week, but be careful, because that appetite will likely rapidly fade away after the share price tanked 15% in the after hours trading yesterday after an earnings and a revenue miss for the company. Now, anyway, all this is just basically to say that the appetite for meme stocks and cryptocurrencies overall is back in force, and that is a very, very important gauge for overall risk appetite and sentiment in the market. Traders are actually quite confident today in the upcoming interest rate cuts from the major central banks. Robust US growth doesn't scare as long as inflation continues to ease, and even if the inflation doesn't ease, the recent rise that we saw in inflation doesn't seem to be a concern, as it's believed to be temporary. But still, I would say be careful, because I'm an all-time pessimist, because we already heard that temporary rhetoric before, which proved to be fairly misleading back in 2021, remember? But anyway, for now though, inflation hasn't been a major concern for the Fed. The Fed is expected to cut its interest rates in June for the very first time, cut 3 times this year, and yesterday's 5-year bond auction in the US actually saw some strong demand from investors, and the S&P 500 retreated slightly from an all-time high level. Now, the collapse of the Baltimore Bridge in the US somehow dampened the mood for some companies, especially that will see their trade routes distorted by this accident. The most concerned are going to be the automakers and the transport of coal, gasoline and grains. But if all goes well beyond that, the S&P 500 is set to print a 5th consecutive month of gain, and that's a thing that has not happened since 2013. Now, the major risk here to the rally is a renewed pullback of the Fed cut expectations. I don't know if we see a higher than expected inflation data, for example, and or a possible deterioration in earnings expectations. Now, what's also interesting here regarding the Federal Reserve's interest rate cut expectations is that, the expectation of these 3 rate cuts this year is intact, but if and only if the first rate cut happens by this summer. Because many investors now actually think that if the Fed doesn't cut the interest rates by June or by July, there won't be any interest rate cut this year because of elections and the sensibility. So it's 3 rate cuts or none. So none is a risk, but that's not the base case scenario. So in the case of base case scenario, the stock rally in the US is expected to broaden beyond technology. As such, the S&P 500's equal index is expected to catch up with the normal weighted S&P 500 index. Then interest should also broaden to small and mid-cap stocks and commodities like gold, copper, and crude oil, as we discussed in detail in yesterday's Market Talk episode. So you can go and watch that episode again if you missed it. But well, today, note that US crude is under pressure this morning since yesterday, as the API report printed a surprise 9.3 million increase in US oil inventories last week, and the expectation was a 1.2 million decrease. And well, the official EIA data is due today. But buyers are seen into the $80 per barrel psychological mark, as the growing excitement of rate cuts from the major central banks around the world gives support to the oil bulls right now at the current levels. And while still in the commodity space, one of the hottest commodities of the moment is cocoa, because the price of cocoa futures spiked past the $10,000 mark per metric ton yesterday, following an exponential rise since the end of 2022, a rise that could actually make the Nvidia and Bitcoin holders jealous, as the price of cocoa futures rose by around 355% since September 2022. So cocoa beans are now more expensive than copper, just saying. Now, the reason behind this exponential move is mostly a demand and supply story, because the global demand for cocoa beans has doubled over the past 30 years, which is not a surprise, but there hasn't been enough investment to keep up with this rising global demand. And well, in the short run, the bad weather conditions and a disease that ravaged the cocoa crops in Ghana, which is the world's second biggest producer of cocoa, well, just didn't make the matter better. It just made the supply situation worse indeed, and sent the price of cocoa futures skyrocketing since the beginning of last year and the end of 2022. So chocolate companies like Nestle, Mondelez, and Hershey will continue to feel the pinch of rising raw material prices if they can't pass the raw material price increases onto their customers. So it's worth keeping an eye on that space. Elsewhere, well, bad news continued to flow in for Apple, unfortunately. This time it was about the company's iPhone sales in China, which actually plunged by 33% in the month of February compared to a year earlier, after bad January as well. And an insider denied the speculated collaboration between Apple and the Chinese Google Baidu, which actually could have been a certain boost to the company's China sales. Now, price-wise, Apple shares slid to close the session below the $170 per share level yesterday. The share price stepped into the medium-term bearish consolidation zone after having slipped below the major 38.2% Fibonacci retracement on the 2023 rally. So in this environment, there is a greater chance that we see a further slide in Apple's share price than the contrary. And Apple will reveal its AI strategy on June 10th only. And until then, it's a long time, well, investors will likely remain skeptical regarding how the company will make AI a priority and how it's going to catch up its delay. Now, finally, I'm going to give a quick cap for the FX markets. The US dollar index pushes higher today despite the soft Fed expectations. It could simply be because of a mounting edginess before Friday's core PCE print and the fact that most Western traders, well, will be off to their Easter holiday to hunt for their expensive chocolate bunny. So maybe, but just maybe, traders are just preparing for a potential bad surprise on the US inflation front beforehand. The dollar yen is testing the Japanese officials' limits, on the other hand, near the $152 level, as the euro dollar is softer this morning before Spanish inflation data and the Eurozone sentiment data. Now, inflation in Spain is seen higher in March, and a hotter than expected inflation figure could actually slow the euro's actual weakness against the greenback, but it will unlikely derail the expectation of a June cut for the European Central Bank. Now, the expectations are being played after the June meeting. Across the channel, cable is under pressure as well on the back of growing dovish BOE bets. There is now a chatter in the market that the Bank of England could actually cut its interest rates as soon as next monetary policy meeting, but obviously that probability is just around 20% and it's not a major thing. So the overall direction of the major peers against the US dollar will mostly depend on where the US dollar is headed next, and well, that's basically on Friday's PCE data is shoulder in the very, very short run. So there you go. This is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments, and please do not forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.